Good Friday morning, everybody. This is Hoda, your host. It's Friday, July 26th, and we are talking about one of the companies that a lot of our investors or communities or members in our community across the stock card are very excited about. It's one of the most visited stock cards on the stock card platform. And as it turned out, this week they released their quarterly earnings report, and there were quite interesting stuff in this report. And the stock jumped up in terms of price. So we're basically digging deep into this company, and we're exploring whether these improvements that have led to uh, jump in the price, whether it's worth investing in the company or not. So that company is Snap, also known as Snapchat, and the ticker symbol is the Snap. And if you are probably in a younger crowd, maybe 25 to 35, or maybe even younger, maybe 14 to 30 years of old, years of age, you're probably a user of this platform. And you've probably been wondering whether it's a good time to invest in the Snap or not. So this is if I show you on a stock card, I went to stockcard.io/snap. I show you what happened to the price this week until July 20th, something around here. The stock was really near its low, all-time low. And what happened after the quarterly earning earlier this week, the stock basically had a huge jump to almost $17 per share. And then it also had a little bit of a further growing up as people started getting excited about Snap. The other thing that is happening is that sentiment of the market about this company is really shifting. As you see, sentiment is green. We're in this green area. And what that means is that investors are getting too excited or maybe overexcited and overbuying this stock because something interesting is happening or was announced in the company's earnings results this week. So, in order to give you a little bit of a context in terms of why this stock has been on our watch list on stock card and we haven't invested in it, let me take you back to 2017 when the company IPO'd. And at the time, we were not sure about Snap for a couple of reasons. One was the Snap at the time, basically when they did an IPO, they talked about them being a camera company. If you look at their S1 document, at the time, they said Snap is a camera company. And they also had a lot of issues about their compensation structures. There was significant amount of outstanding shares that were granted as a compensation to the executives and to the employees. And also, just like any other IPO, the company had just burning so much cash, not generating any free cash flow, was unprofitable. So when it went an IPO back then, we basically decided, let's just give this company a couple of quarters and see what happens, right? And then so we kind of highlighted all this story every time that we looked at the company. And what happened during this couple of quarters is that the company's operational strength continued to basically go down. What happened was there was issues about whether the founders, the co-founders, the leaders, or Steven, I think, what is his name? Kevin Spiegel. So there was issues about whether the leader of the company is mature enough to take care of this big company. And we've seen that their sales growth at the time, this is again like a couple of quarters ago, the sales was growing, but what was not growing at the time was daily active users. And if you don't know daily active users for social media like Snap, similar to Facebook or YouTube, these things, the way you evaluate whether this company is creating value for its users is that how many of the users are coming day in day out to use this platform, because there is the more eyeballs, quote unquote, comes and look at this product or this platform, the better company to monetize this eyeballs, basically sell advertising to them. So for quite a lot of quarters, there was issue about whether the daily active users are growing. And every time we looked at this company from a investment point of view, we realized that there are concerns about the company's ability to establish itself as a strong candidate for online advertising, namely competing with likes of Facebook. So I've moved forward to this quarter, and a couple of interesting things happened. Actually, before I get to the company's strengths in this quarter, let me show you the past investment return of the company. So the company, since it went IPO'd, it lost a significant amount of its value. So the return in the past 1 year for the stock has been minus 62%, which means all other investors, basically majority of them, saw the same problem that as we saw when the stock went IPO, and then the quarters following that, and the company didn't show the operational strength and the price kept dropping. But year to date return, if you look at it, is 169%. So it means this kind of dual direction of the stock, as you see, is just an indicator that recently something exciting is probably happening at the company. And that's why investors are getting excited, and that's why the price is like really going up. So what happened this quarterly earning is couple of interesting things. One is, let me go back to our notes that our analyst wrote on 24th of July, just a couple of days ago. Basically, what happened is that the company was able to not only increase its revenue, but it also was able to increase its daily active users by 13 million. And so it's looking like that the company have found a way to increase those number of eyeballs that are coming and looking at advertising on the company's platform. And one of the most important reasons is actually the decision that the management team made. And they said, for quite a lot of quarters, we were trying to be this platform that is appealing to everybody out there. But then they realized they don't need to appeal maybe to a 50-year-old or a 60-year-old and the moms and dads and grandparents. They can just focus on their core market of the younger audience, 14, 15, 16, 20, 21, 25, that age, and then do cool things, like the augmented reality stuff that they're doing on their platform, like face swaps that people do on, or like adding different filters and things like that. Even creating original content through partnership with things like NBC Universal, and basically constantly create content that matters to that group of audience, younger audience, and they're able to really make it interesting, and they can get these people come back and back to the platform. And that's what happened. The growth on daily active users, and that the interesting part is they're seeing advertisers are actually getting excited about the company. The other thing they did is that they introduced or improved their advertising platform or tool, that you and I can go, or I mean bigger companies, I guess, and they can go and buy advertising and see the impact of their investment dollars or advertising dollars on the platform. So what they did is they improved that as well, and now average revenue per user is about $2 on Snapchat's platform, and that's a 48% year over year revenue growth. So if you look at all these things, you gradually get a sense that this company is getting a hold of its operations. The management, the leadership that we were worried a little bit about are getting a hold of what they need to do in order to grow the company. Obviously, as we said, revenue, it's been growing significantly in the past fiscal year, and it's expected to grow again significantly in this current fiscal year. And revenue has been compounding in the past 3 years. And they've another thing they've been able to do, although the company it's unprofitable, so earnings per share is negative. There's this good news here that they've been able to improve their operations efficiency. So their earnings per share or the losses are becoming smaller. And similar to most these kind of IPOs, technology, social media companies, while the company doesn't generate any free cash flow, but it has significant amount of assets, short-term assets, and it has, which is basically cash, right? And then it doesn't have a lot of debt or has no long-term debt. So from a quote unquote balance sheet point of view, the company is pretty strong. So based on everything you see right now, is that this company, Snapchat, is looks like it's finding its own little niche, and by focusing on its own little niche, has been able to improve their company's strengths drastically. And that's why you see the market probably seeing very excited, getting too, maybe even too excited, and the sentiment is pretty positive about the company. And if I click on this, see that this just aside from short interest, all the other integrators are talking about positive sentiment in the market about this company, about Snap. So what did we decide at the end in terms of the whether Stockard and the Stockard team invest in the company or not? What we decided is that although we are super excited about the progress that Snap is making, but we're still concerned about two or three things. One is whether we don't know this growth in revenue and daily active user and the reduction in losses or getting more efficient is stable or not. We would like to see a few more quarters of this stability to continue on before we can jump in. And then the second thing is Snapchat is not the only game in town, right? Now there are all these social media channels or platforms that are emerging for younger people. You can think of TikTok as one. Even like YouTube is trying to appeal a lot to the younger audience. So put all this together, we're not sure whether this company has a significant quote unquote competitive mode that it can compete with Facebook and TikTok and YouTube and everybody else. It can very well do that, but we'd like to see that for a few more quarters. So the company, we were ready to take this company off of our watch list, but with the progress they made this quarter, we basically decided that we want to watch this for a few more quarters. And some of the questions that people ask us usually is that, okay, so if you don't jump in right now, you may lose the chance to buy this company at a good price, which is true. you may lose your opportunity to buy a company at a good price if you don't jump right now. But at the same time, think about all the other companies that are known as investment opportunities that create a significant return for investors. Think Facebook, think Amazon. All these companies, even after they became profitable, there were years and years that we could have jumped in and benefit from a growth of a stable company. But also there were always opportunities. Let's say for last year we had the issue with data privacy concerns, and the stock really dropped down, and that was an opportunity to jump in. So the reason we're not yet jumping in Snap for our own portfolio is that we'd want to see the company has operationally as a strong operations and prove that it can sustainably grow, and then we will start having a opportunity. We will start having a real look at the company, and then probably jump in by adding a few shares, and then continue to monitor the stock. And whenever we get a chance to buy more, we will add. But we will only do that when we are feeling comfortable about the company's operations and feeling sure that this company can maintain and sustain the current growth rate that they've been able to achieve through their revenue, as well as through their basically what we call as daily active users, which are the key important indicators for this company's growth. All right, so that's really a summary or key review of what happened to Snap and what we are planning to do with Snap. I want to talk about something interesting in terms of an industry that Snap is entering to. But before I jump in, I want to see if there is any question on the from the webinar participants. I always call this podcast because we also do a podcast, as you know, a Renegade Investor podcast, and sometimes are anyways. So if you have any question, please type in the chat section of the webinar, and then I'll get to your questions. And I'm typing myself a sentence there in the chat box, so that you know where the chat box is here. But basically, if you are on the mobile phone, on the bottom of the screen, there is a little chat icon, and if you're on the desktop, on the right hand side of the screen, there's a little bit of there's a little chat box there. So one thing I want to talk to you about is that if you go to the key info section of the Snapchat and look at the collections it belongs to, you see that the company, it belonged to this collection of augmented reality. As we talked about the face swap functionality on Snap, that's a really interesting indicator or signal that the company is making strides in augmented reality. So you might not invest in Snap because it's a social media advertising play for you. But if I go back to stock card search page and look for interesting companies that you might consider for your portfolio as a play in augmented reality, when I click on the augmented reality collection, you see Snap appears there. Snap might be a risky investment, but still worth investing in it for those kind of capabilities, especially augmented reality functionalities makes Snap an interesting platform, and then advertisers may see opportunities to create these cool and interesting advertising opportunities and interactive advertising opportunities on the Snap. So there is this play of augmented reality aspect to Snap that to be honest, we at Stockcard, we haven't yet bought into it, meaning invested in it, even for the reasons of the augmented reality. But some of the users who are ready to take risks on augmented reality type companies might consider Snap among other companies in the augmented reality collection. Okay, so that was one noteworthy. Okay, so that was one noteworthy piece of conversation that I wanted to have with you when it comes to Snap. Let me see whether we can use this opportunity as well to answer any questions by some of our participants. All right, so if there's no question, that's it. Thank you very much for joining in this edition of Stalker's weekly webinar. Every week, we tackle one interesting question that is either submitted by our webinar participants or there's a topic in the stock market like what we did today. If there's an interesting topic like that, we'll tackle that and answer your questions. So please make sure to visit our webinar website, blog.stalker.io/webinar, and you can see the previous editions, episodes, or of our webinar. You can also take a look at the calendar that we have, and then reserve the dates that work for you. It's almost every Friday. At 11 a.m. Pacific time. And when you go and reserve your seat, there is a box for you to submit your questions. So you can submit any question that you have as you go through the process of signing up and reserving your seat. So here's the box I'm showing to you. You can submit your question there. Anyways, thank you very much for joining. You had a good chance to review Snapchat or Snap Stockcard as I was go through it, and looking forward to the next Friday and talking about another interesting company or topic in the stock market. See you soon, and happy Friday and happy weekend.